Hello friends, let us continue with share capital, right? So we completed our discussion on two very important topics, that is oversubscription and undersubscription of shares, right? Oversubscription is very important because you will get a question on pro rata allotment because that is the most important part of share capital, right? So we discussed about oversubscription when the shares applied are more than shares issued, and in case of undersubscription the shares issued are more than shares applied. In case of undersubscription we only take the number of shares that have been applied for and we will pass the journal entries according to that. So that was all about oversubscription and undersubscription, right? Now we are going to do a topic that is preparation of cash/bank book. Now if the question asks you to prepare a cash or the bank book, then what you have to do? What you have to do is all entries related to cash or bank will be posted to cash or bank book, right? And remaining entries will be done in journal, right? So in the question, if you are asked to prepare the cash or the bank book, then what you have to do is all the transactions that are related to cash or bank, they will be posted to the cash or bank book. There will be no journal entry passed for that, right? Journal entries will be passed only for those transactions which do not involve the cash or bank book. Like when you receive the application money, you say bank to share application. Now this entry will go to the cash or the bank book and not the journal entry. You will not pass a journal entry for this. You will just post it to the cash or bank book. Then on the allotment, you transfer share application to share capital. That entry will be journalized and not posted to Cashbook, right? Let us see with the help of an example. A Limited issued 20,000 shares of rupees 10 each payable as 4 on application, 3 on allotment and 3 on first and final call. Right? All shares were subscribed and allotted. They say pass necessary journal entries and prepare Cashbook. Clear? This is a very simple example that a company issued 20,000 shares of rupees 10 each payable as 4 on application, 3 on allotment, and 3 on first and final call. All the shares were subscribed for and allotted by the company. You have to pass the necessary journal entries and prepare the cash book. And here I gave you the thumb rule that in case you are asked to prepare the cash book, then all the entries related to cash and bank will be posted to Cashbook and will not be journalized. Right? So how to do this? Let us prepare a cash book. Right? This is your debit side. This is your credit side. Right? This is how you prepare your cash account or the cash book. Now there is no opening balance of cash, right? Now, what will happen? First of all, you will receive the applications along with the application money, right? When you are receiving the application money, you will receive on 20,000 shares at the rate of rupees 4. 80,000 rupees is your application money that you are receiving. What is the journal entry? Bank to share application. But this entry is not to be journalized now because we have been asked to prepare cash book. So what will be entry to share application account? How much? 20,000 multiplied by 4, that is 80,000. Clear? What will be the next entry? At the time of allotment, this share application will be transferred to share capital. So that amount, this entry does not involve any bank. So we will journalize this entry. We will say share application account debit to share capital account 80,000 and 80,000. Now next, when you have to receive the allotment money, what you do? First you will make the allotment money due. For that, the entry is share allotment account debit to share capital. Nowhere the cash or bank is involved. So I will journalize this entry. I'll say share allotment account debit to share capital account. How much amount? 20,000 multiplied by 3. This comes to 60,000. This is the amount due at the time of allotment. Now when you receive the amount from allotment, at the time of allotment, what is the journal entry? Bank to share allotment. This involves a cash or bank. So I can say to share allotment. How much? On 20,000 shares at the rate of rupees 3. This comes to 60,000. Clear? Now, first and final call of 3. What to do? First of all, we'll make the call due. Then we'll say share first and final call account debit to share capital account. How much? On 20,000 shares at the rate of rupees 3, 60,000. Now when you receive this share capital, this first and final call, where you will take? We'll take it into cash account to share first and final call, right? 20,000 shares at the rate of rupees 3. This comes to 60,000. Any other journal entry? We have received application, we have received share allotment, we have received the first and final call. Here we have received the whole amount to share capital. This becomes our capital, right? So how much is the balance of cash? You will say by balance carried down 2 lakh. Now you have issued 20,000 shares of rupees 10 each. That means you intended to raise 2 lakh rupees. If you are intended to raise 2 lakh rupees, you received 2 lakh in your bank, right? Ultimate effect is to the only two things. One is your cash or bank will be affected, and the other thing is your capital will be affected. Your cash or bank will increase by 2 lakh, your capital will increase by 2 lakh. Here we have taken 2 lakh into cash, right? And here our capital has increased by 2 lakh rupees. Clear? The ultimate aim of raising capital is your two accounts will be affected. When you receive money from the public, your capital will increase because that money you are going to use for the business. One, your capital will increase, and the other, your cash or bank will increase because you have received money, right? This is what is happening here. We prepared the cash book. We see our cash or the bank has increased by 2 lakh. Here we have credited the capital with 80,000, 60,000, 60,000. Our capital is increased by 2 lakh, right? So this was a very small and easy topic that in the question, if you are asked to prepare a cash book, then all the entries related to cash or bank you have to post to Cashbook and do not journalize them. Clear? Journalize only the entries related to which are not related to cash or bank. Then you can prepare the share application, share capital account. You know how to prepare the ledger accounts, right? That you all know how to prepare ledger accounts. Clear? So this is how you deal with the preparation of cash book, right friends? So if you have any queries, just send me an email at ksjteaching@gmail.com. Clear? In the next lecture, we are going to discuss about calls in arrears. You might say that we have discussed this earlier while the disclosure in balance sheet and before that. But here we are going to discuss some important points relating the calls in arrears. Opening of calls in arrears account, not opening of calls in arrears account. So we are going to deal with all that, right? So that's all for this lecture, friends. Thank you so much.